You ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them out.
Happy Friday, everyone. It is the end of another trading week as well. Plenty has happened overnight as well with movements in Forex, and we will be going through the major points to consider for fellow traders. And it is the 25th of February as well already. And a big welcome to everyone watching the call live as well from the LCMS Traders Club. And I hope if you did get a chance to make the call last night for the 8 p.m. call, hope you did get a lot out of it, or there is the replay to review as well if you did miss out. So that is available for the club members too. So being Friday, we do have the CAD to go through. We've got oil to discuss. I'll be going through the DXY and cryptocurrency and also movements in equities, which has been quite peculiar as well, just with what we've seen with the geopolitical issues. And Kim Hong will also be talking about the the CAD monetary policy meeting next Wednesday as well. So that is something that will be previewed today, with the CAD being in focus. And obviously we'll be going through the news and any developments that we feel is important to consider. So just to get us kicked off, we do have Kim Hong here, currency strategist at LCMS Traders. But before I do hand it over to him, I will just go through the risk disclaimer as well, as trade ideas will be shared as well today. So any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. Again, feel free to ask questions and we're here to help. So over to you now, Gimme.
All right, thank you, Scott. TGIF, everyone. Okay, so, yeah, there's been a lot going on in terms of the geopolitical tension, all right? So yesterday during the evening call, we actually did talk a bit about it, all right? So if you guys, want to know more about what all these sanctions that's happening right now, will actually have an impact on the Russian economy or, on Russia and things like that, please feel free to refer back to yesterday's evening's call, okay? So today I'll be talking about the Bank of Canada monetary policy announcement that will take place next Wednesday at 2300 GMT plus 8, okay? So before that, a recap on what took place previously. Okay, the central bank held interest rate unchanged. Okay, and they actually, most importantly, during the last meeting, they actually revised their forward guidance on interest rates. Okay, that's, I would say, the start of the start of the journey towards the start of a rate hike journey. Okay, so couple of quotes that they made that I find very hawkish. Okay, first one is, with overall economic slack now absorbed, the bank has removed its exceptional forward guidance on its policy interest rate. Okay, and then the second quote being, the governing council therefore decided to end its extraordinarily commitment to hold its policy rate at an effective lower bound. So these two lines, the second quote was actually a quote to add, a sentence to end off the monetary policy statement, interest rate statement. Okay, and so what this basically tells us is, they are open to rate hike already. Okay, so the second point that they actually made is actually regarding this whole quantitative, the bond holdings under their QE program. Okay, and they actually mentioned that the central bank will only consider exiting the investment phase, okay, of its current bond holdings, okay, and unload those bonds, okay, once it starts increasing interest rates. All right, which takes us to next Wednesday's meeting. Okay, what's going to happen? All right, we can expect, okay, the Bank of Canada to hike interest rates probably by a 0.25% increase, okay, probably by 0.25%. All right, so why is that the case? Okay, first of all, they are ready to do it. Okay, simply because they are ready to do it. And inflation, okay, the most recent release, I think it was back in early Feb or mid Feb or something like that. Okay, either early or mid this month. Okay, annual inflation was reported to actually hit a 30-year high level in Canada. Okay, so it's pretty much just like what the pretty much just like what the UK is facing right now. Okay, 30-year high inflation level. Okay, so inflation is rising. Okay, the Bank of Canada is ready to hike rates. And with this whole current ongoing geopolitical tension, you guys already know that oil prices has been increasing, and when oil price increase, that will definitely lead to a higher inflation pressure coming in. Okay, so inflation is unlikely going to tone down as expected by, or as forecasted by many of the major central banks, okay, previously, all right? So which is why personally, I'm actually expecting some of the major central banks to actually revise their whole time frame, okay, in terms of when this inflation will actually stagnate and come back down. Okay, like recently we have saw the RBNZ has revised its inflation projection across the board. Across the board meaning like for all the periods that they are actually projecting, all right, all the way up to like 2023 or maybe early 2024 if I'm not wrong. Okay, so they have basically just revised upwards, for all the projections for inflation. Okay, so with this ongoing war, we can actually expect inflation to be even more lasting, okay, than previously anticipated. Okay, and because of this, all right, no doubt it's very likely that the Bank of Canada will be hiking interest rate by 0.25% at least. Okay. Now the question is, will they actually be hiking more than 0.25%, right? Like for example, a 0.5 maybe, okay? It is possible, okay? It is possible. But in my own view, all right, I feel that the Bank of Canada may, okay, although, there's a lot going on right now, the Bank of Canada may still not take up the aggressive approach of a 0.5%. Okay, the Federal Reserve maybe, okay, but the Bank of Canada, I would say I'm leaning more towards the unlikelihood that they will do it by 0.5. But okay, like I've always mentioned, we are all traders, right? When there's a surprise, price moves. Okay, so if let's say the Bank of Canada were to decide to opt for a 0.5% rate hike, okay, instead of a 0.25 next Wednesday, then it is very likely that we will be seeing a strong strengthening, okay, of the Canadian dollar, okay, and depending on how oil price move at that time, okay, probably like early next week, it may actually be a double booster for the Canadian dollar, okay. So I'm actually very looking forward to the Bank of Canada's meeting next Wednesday, all right? But, all right, this is 0.5% hike. What if the central bank actually decide to hold unchanged? Okay, well, why would they actually do that, right? So they may actually cite the ongoing war, okay, between Russia and Ukraine as a reason why, all right? Because, I mean, it's although the country is pretty far away from, the two countries in war, but the thing is, because of all this uncertainty that's going on, there's too much uncertainty in oil and things like that. And you guys know that many of the major nations around the world have already imposed sanctions on Russia. Okay, and any countries that need oil or that are dealing with oil and things like that will have to pay particular attention to this whole political tension that's ongoing, okay? Because oil price, as you guys know, as we all know already, has caused crazy inflations hike in for the past probably like 2 years already, okay? So with all this in mind, there is also a possibility that the Bank of Canada may just hold unchanged, okay? But in a scenario whereby they decide to hold interest rate unchanged, okay, then we may actually be seeing a brief weakening in the Canadian dollar, okay? Because it really is kind of at the moment it's really, the whole situation right now is actually putting the Bank of Canada or maybe other central banks as well in a very difficult spot. Okay, with this war going and then with inflation rising, if they were to hike rates, if they were to increase rates aggressively and things like that, they may actually they would unlikely be able to what do you call it, reverse their actions later on. Okay, but then if they were to do it slowly, steadily, all right, then it may not be sufficient to actually tame the ongoing inflation and things like that. Okay, so it's a bit of a tough spot there, but thankfully we are just traders, so we'll just see what the Bank of Canada and the other central banks will be doing, and then we'll just trade accordingly. All right, so simply put, if no rate hike, okay, then there may be a weakening in the Canadian dollar in the short term. All right, if the Bank of Canada decides to hike rate by 0.25%, okay, then yes, we may be seeing a short-term strengthening as well, okay, of the Canadian dollar. But really, it's just for a short term because, like I said, the market is pretty much expecting the Bank of Canada to hike by 0.25. Okay, so the element of surprise is not there, and of course, by default, an interest rate hike will be positive for the currency. Okay, so I'll be expecting strengthening in the Canadian dollar for the time being. And if the Bank of Canada decides to increase interest rate by 0.5%, okay, now that may actually be a more, I would say, sustained strengthening, okay, of the Canadian dollar, just like how the New Zealand dollar did, okay, although they carried out, although the RBS carried out a 0.25% rate hike, but then, they have revised their whole interest rate projection upwards, okay, making it more, making the whole, I would say, tone being delivered more hawkish, okay. So if a 0.5% hike from the Bank of Canada is being carried out next week, all right, then the strengthening of the Canadian dollar may actually be similar to how the New Zealand dollar did just a couple of days ago, okay? But, all right, all these things is just based on monetary policy actions, all right? What if we have more headlines coming in from the, from the ongoing war, okay, that can actually reverse any form of hawkishness from the Bank of Canada, just like how it did to the RBNs. Okay, if you guys were to look at the chart, the prices of New Zealand dollar, okay, when they actually hiked interest rate by 0.25% a couple of days ago and, delivered a hawkish tone, you guys would have seen that, New Zealand dollar actually strengthened across the board and the move was pretty sustained, okay, throughout the whole day, all right? It actually strengthen, stagnate, strengthen, stagnate, and strengthen, stagnate. And then comes the Ukraine war, everything just reversed. Okay, it's just like that because of a risk-off sentiment taken up by the market participants. Okay, so similar things can actually happen again to the Canadian dollar. Okay, next Wednesday. Okay, so really, if you guys are entering any trade based off the whatever decisions the Bank of Canada made next Wednesday, okay, then just keep in mind that further escalations may take place or de-escalation may actually take place. Okay, so just just keep in mind that this whole ongoing war can potentially cause a reversal in whatever hawkish or dovish tone that any central bank sent out at the moment. Okay, so with that, do we have any questions on the Bank of Canada's monetary policy decision next week? Okay, no questions. All right, if that's the case, then I will hand it over to Scott for his analysis on DXY. Over to you, Scotty.
All right, thanks, Kimmy. And just to get started, so the US dollar index, we did see, we saw a rush to safety when it was around, over 12 hours ago or so when things were really starting to develop and we were getting updates. And we saw US dollar index got to 97.72 at the peak. Now we are seeing a pullback now, and we are seeing it just dipping below 97. So the hourly chart here really paints a picture. So we've seen some support, and we actually saw recent highs at 96.93. And this was from a little while ago. We are seeing price find a little support around here. And from a news point of view, everything was pretty much in line last night, the preliminary GDP data. And I'll just go to this, but really what's driving markets is not that. It's more how the negotiations are going and what sanctions are coming out from world leaders, essentially. But we just have a look. We did see, and I'll just go to yesterday. So this was, it was a beat. Well, it was in line, actually. So it was 7% was the GDP quarter on quarter preliminary. And then for later today, we do have the core PCE price index. But again, what I'll be looking for, and I've been monitoring, and I will go to the charts now, is let's go and have a look here. So we've got the DXY and it's behaving like this, but what I also had a look at was gold, and it was quite an aggressive wick here. So on the daily time frame, we can see what happened here. So there was a 1974 was the high. So that's quite aggressive how it actually retreated so fast. But just now, if we go to the hourly, you can see there has been a little bit of choppiness because I was looking at potentially trading either gold stocks or oil stocks on the Australian market. And we are seeing a minor pickup in the gold price here. And also we've got Brent crude is also, we did see, so it gapped up here. We saw it move a little bit higher the previous hour. This hour was sort of neutral, but we are shifting a little higher. And what I was looking at was an Australian stock as well. I didn't actually take any trades today, but it did have a pretty significant gap down. And we saw it test the low of 27, which has been supported previously as well. So unfortunately, it was just a little bit lackluster and a bit unclear. And I've been trying to find news reports as well on what's been going on in Ukraine. And I just haven't been able to find anything significant. What is overwhelmingly being released is a lot of news out from what Joe Biden's got to say and also Boris Johnson. And the EU are going to play a pivotal role, it looks like, too, on the sanctions that they take on Russia. And then hopefully Putin and the president of Ukraine, Zelensky, they can come to some arrangement and that some sort of situation can be agreed to where troops are sort of taken back out of Ukraine as well, because it's very unclear still. So be cautious with playing reversals as well, and also jumping back strongly risk on is not something I'd be looking to do. So for the US dollar in general, I just want to see it settle somewhat. And really, it's just going to be short-term trades, not shorting the US dollar. I'd prefer it to pull back a little, but it might just hold around this 97 to high 96 level for today. And then see if next week, early next week, we see any signs of potential positive negotiations from world leaders with Putin. So for now, just staying on the sidelines, guys, just showing some caution. So those are my thoughts there on the US dollar and also equity markets too. Sometimes the trade that makes sense, it's just unclear and you just got to stay on the sidelines. So we do have the CAD in focus now with Jin. So I will pass it over to you now, Jin.
Thanks for that, Scotty. So quite a few things happening on the CAD US dollar at this point. We're looking at, or the US CAD at this point, we're looking at possibly, well, as Kim Hong was just sharing with you, the possible rate increase or highly likely rate increase coming from the Bank of Canada next week. And just share with you here on the timeline, we're looking into next, where is it? I think I just missed it. We're looking into next Wednesday night at 11 p.m. GMT +8, looking at a possible rate increase from the Bank of Canada. So what could happen on the US CAD? As Kim Hong was just sharing with you, look with a rate increase, we're possibly looking at that strengthening on the US CAD. But with all the current war and tensions happening, what that could imply is that the US CAD here on the H4 time frame, as we've seen yesterday with the war happening, we saw that dollar strength, we saw that push towards that 1.2849 or 1.2850 resistance level, and then now that quick retracement back down. Anticipation here is that if it doesn't get resolved over today and the weekend, we're possibly going to see that bounce back off from this 1.2776 level back towards that 1.2849. So what it could mean is that in the current situation, you could be looking for that buying opportunity. Not right now, look for it to bounce back off, or even if you wanted to enter a trade right now, you're looking at a 20, 30 pip stop loss for a 40, 50 pip take profit level, a 1:1.7 risk reward ratio towards the upside. This will all be this should be kept as a short-term trade, something that you would be looking to enter over the day, not something that you wouldn't be looking at it on the H4 time frame. You should be looking at this short-term. Definitely get out of a trade before the weekend. Get out of the trade before the weekend. This could also continue on into next week, but given that we're expecting the rate increase on Wednesday from the Bank of Canada, what I'm looking for is possibly a short-term selling opportunity. If it does bounce back up towards this resistance level, you can be looking to short it down slightly, keep your stop loss tight, 20 pip stop loss, 40 pip take profit level, or even a 50 pip take profit level towards the downside for the US CAD could be possible. I think the more likely scenario is that you would wait for it. Even if it does react off this resistance level, don't do anything. You wait to sell it down into next week. So let me just check. Next week is the 2nd of March. So you're looking at possibly somewhere here on the 2nd of March, looking to sell down from that 1.2775 level. If it does break below that point, then you're looking at that 20 pip stop loss, 50, 60 pip take profit level, a 1:2 or 1:3 risk reward ratio towards the downside. At this point, as we can see, the US CAD is still trying to go lower. Look for it to react off this 1.2776 level. It might bounce off this point. You would have a buying opportunity back up, I would say about there. If it doesn't, then look for it to react to that 1.2777 level for that selling opportunity towards that 1.2710, possibly even towards a 1.2666 support level. So quite a couple of trade ideas on the US CAD, both for the upside and downside potential. I think that at this point, we're looking at a retracement, but bear in mind, we do have a highly likely interest rate increase from the Bank of Canada mid next week, looking at some strength the Canadian dollar at this point, but that would be, in the scheme of things, next week is a very long time away. A lot more short-term trade ideas, a lot more scalping ideas to be had, especially with the conflict happening in the Russian-Ukraine borders. With that, I'll pass it back to you, Scotty.
All right, so just to finish up, it is Friday, so we've got crypto in focus, specifically Bitcoin and Ethereum. And frankly, there's a little bit to talk about with this. So with Bitcoin, it was interesting. We did see selling off as things developed, and we saw inflows into gold. But now we saw the low there was around 34,000 or thereabouts, a little bit higher than 34,000. I've got the lows recently of 33,000 I'm looking at, and we're just sort of actually seeing a mild risk on scenario play out here with Bitcoin. But I really do think that it's more of a short-term market to be looking at, buying Bitcoin and really any crypto. And this could easily sort of fade away quite quickly. I've got some points of interest here. I've got 28,000, and then I've got the high 18,000s, 18,800 or thereabouts for targets just to watch for pullbacks. It's difficult to sort of go and say shorting crypto. I don't really think so. It's going to be very rocky and just sort of hard to play is how I've just been seeing things, just given with everything that's going on, it just seems that there's a lot of volatility and it can be a little bit challenging. So I just more of a caution play. If you are looking to get long, I'm really looking for 28 to be tested, 28,000, and at least a break of 30,000, and then see where that goes. And then if 28 goes, then really seeing where some consolidation is going to be found. So just staying out for now on that as well. And Ethereum, very similar looking chart, strong buying volume as well. And we're resting just over 2,100. Support is being respected. So currently the price is at 2,600. And it's just going to be key to really see what tonight brings with everything that we saw overnight. And just like to have a look at the NASDAQ. So that's what we saw. So very interesting looking candle. Almost looked like we were going to see some capitulation, and 13,000 did hold. And now we saw that close, which was quite strong. So very interesting market. And that would have caught a lot of people on the short side as well. And this could really be a bit of a bull trap, just given there's no clarity. And again, if I see anything, I'll make sure I do share it in the LCMS Traders Club. Make sure you get involved as well. Visit the Jindal Thai website to become a member. And for now, really, that's it. So it's just more of an observation time with everything that's going on and just seeing where markets want to go to, or they could just go a little bit everywhere and there's no clear idea of what's going on. So stay cautious, everyone. Ask questions in the club. And that's it for now. Thank you for joining us for this week, and hope everyone has a great weekend as well.